a lot of people that I know, and I feel like I'm talking to friends. So thank you for the warm welcome. It's one of the things I really like about the note business. Another thing I like is the longevity of the note business. And the third thing is it's a sizable market. It's a sizable market that has a lot of opportunities for niches within that market. So today I want to talk about how big is the seller finance market. Now this is a question whose answer I've been chasing and researching for the 31 years I've been in the note business. When I got started, I was fortunate to go to work for someone, a man that had been already buying notes for 30 years. And no, that wasn't Eddie Speed. He's old, but he's not that old. But this gentleman, oh, now, yeah, I get a little laugh there, all right. All right, I don't even know if Eddie's here to make fun of, but we did. So, but it was through the note business, of course, not many years later that I also met Eddie. But when I went to work in the note business, it was through a company in Spokane, Washington, and the owner of that company, the founder of it, he'd been buying notes since the 1950s. So I feel like, I have 30 years experience. I learned from someone with 30 years experience, and so I'm here to say that the note business has longevity. So during that time that I was there with them, I worked there 10 years before I started my own company. And while I was there, one of the things I was charged with as part of a team was to grow their seller finance note business from $1 to $2 million per month to $20 million per month. That's how much they wanted us to buy. And fortunately, we did that. And part of the thing that we did to accomplish that was that we did studies on the market. Now, back then, the studies were pretty archaic compared to today's standards. But what we realized was the seller finance market on average is about 6% of transactions. Now fast forward to 2019 and we have much better methods for researching and getting this data. So today I want to talk about how big is the seller finance market, what are some key trends we've seen over the past decade, some average loan amounts and LTVs, different creation by property type, the 10 states that make up 69% of the volume. I want to look a little bit at mom-and-pop sellers compared to seller financing pros, and some different marketing resources. So if you're thinking that's a lot to cover in my 13 minutes up here, you're right. So let's dive in. Where do we get this data? Well, this data comes from the county recording data. It's public records, and it is a seller of property who is also the lender, known as seller financing. So that's the beneficiary on a deed of trust, a mortgagee on a mortgage, or the seller on a real estate contract for deed that's been recorded. So it has to be in public records. Now the data comes raw from Advanced Seller Data Services, and we take a lot of time and energy to aggregate this data and make it make sense, something we can use and implement. And it comes from 2,137 counties reporting out of 3,007 in the US. So these are the counties that are online, the data is easily obtainable, and they have a sizable enough recordings to make it worth the while. And they are first position or wrap, so they are not seconds, doesn't include the seconds in this data, and it's a $30,000 loan amount or above. So how big is the seller finance note market? Well, last year in 2018, $25.9 billion with a B dollars of seller finance notes were created. That's a big number. That's just in 1 year. Now remember, this doesn't count inventory of private money lenders. A lot of people originate notes. It doesn't include the bank paper that you see that are on a lot of the note trading platforms where it was non-performing, it's become re-performing, or scratch and dent. This is just seller finance notes. So some of the trends that we've seen when we look at the data is the total number of notes created increased by 2% in 2017. Now that's based on the count. So we look at the data based on number of transaction, that's the count, and then also the dollar volume. And we look at the dollar volume of residential notes, that was up 20% based on dollars over 2017. Texas, Florida, California, and Arizona, they were the top 4 producing states for seller finance notes. Texas traditionally is always in first place. It has been for the 10 years I've been tracking this data. So if you're in Texas, it's a great state. Florida and California, we seem to flop back and forth between second and third. And Arizona is always on the top as well. And another key trend I saw was that the number of multi-note creators was actually on the rise. So 82% carried 1 note, 7% carried 2 to 3 notes, and 11% carried 4 or more notes. So when Dodd-Frank came along and they put some restrictions on seller financing, they made some exemptions for sellers selling one note in 12 months and then entities 3 or less. We did see some dip in creations by multi-notes, but what we've seen now is that people understand Dodd-Frank, they understand how to get an MLO, they understand how to paper these up all in compliance with seller financing, and I think personally that's why we're seeing these numbers on the rise again. So when we look at the seller financing usage on a graph over the last 9 years, since 2009, now these go through 2018 because of course 2019 hasn't happened, completed yet, but we see the $25.9 billion of volume there on that graph. We can see that we're just about the same kind of count level as we were back in about 2011. So you can see when the subprime meltdown happened, and there was all the foreclosures and banks weren't financing, we see a lot of seller financing was created and that went up. And then as the market recovered, it went back down to levels that we've seen previously, and now we saw a slight tick up again in 2018. So what makes up the seller carry market? Well, the residential category is 54% when you look at the counts, and it is $9.59 billion, or 37% when you look at the numbers. Then we look at land. Land is $7.37 billion, 29% by the numbers, or 13% by the count. Then commercial makes up 15% by count and 21% by the dollars. And then we have this unknown category. So what is this unknown category? Well, that makes up about 18% by count and 13% by dollar volume. And really, unknown just means it's either going to be commercial, land, or residential. It's just that that data was not readily available from the downloads from the county courthouses. They just didn't code when the data was downloaded what that property type was. So, in my opinion, it probably is a similar mix to what you see there for residential land and commercial. So they are definitely seller finance deals, just didn't easily fit into a category when the data was obtained. And I thought those were important numbers to include because you're talking about, what, 13 to 18% of the market, depending on how you look at it. This is a little bit harder to read, but this shows the same kind of breakdown in 2015, 2016, 2017 to 2018. You can see how the dollar volume went from 20.7 billion to 20.8 billion to 22.2 billion to 25.9 last year. And one number that really sticks out is the land number. You can see in 2018 it went from 3.5 billion to 7.3 billion. So a lot of big seller finance land transactions happened last year. Thought that was a very interesting thing to look at. And now we look at what is the average loan to value on a seller finance note. Now, when you think seller financing, don't people think 0% down? And there's certainly a lot of seller finance deals that were 0% down. But the average loan to value on a seller finance deal in the residential category was 81%. That's some sizable down payments. And the average size was $195,062. That was up just a little bit over 2017. Commercial had a lower loan to value, so 75%. So on commercial deals, you're seeing almost a 25% down payment, or perhaps maybe some were carried back in a little bit of a seller second. That's always a possibility as well. The average loan size was $407,363, and that was actually down a little bit from the $417,000 in 2017. And then in the land category, it's 74% loan to value, similar to commercial, but that average size of a seller finance note in land went from up to $605,000, almost double, more than double, $264,000 the year before. So that just shows a lot of big land deals happen in seller financing. We also look at state production comparisons. So the top 10 states made up 69% of the volume, and the rest of the states, the other 40 states, made up 31% of the notes created with seller financing. And that's just all these last 10 years we've been tracking this data from Advanced Seller Data Services, and we see that continuously. The top 10 states make up almost 70% of all the volume. So what are those states? That would be the next question we want to know. Well, again, Texas came in number 1 at 22.7%, followed by Florida at 10.4%, and then California at 10.3%. And then you've got Arizona, Washington, Georgia, North Carolina. They kind of trickled in there about the same. And then you have the next set, which is Oregon, New York, and Pennsylvania, and Georgia was in there as well. So we see those are the top 10 states. They change a little bit over time, but those tend to be the top 10 states that we see. Now we're going to look at type of note creators. So multi-note creators are that green bar, and then the big blue bar are the single note creators. I call those mom and pop note creators versus professional sellers, people who create more than one note a year. And the marketing message that you send them is much different. Somebody who is creating multiple notes, you would market to much different than a mom and pop seller. So you can pull lists of people who create more than one note and market to them differently than individual note holders. But we can see that that trend went from 12 to 15 to 19 to 15 to back up to 18%. And I believe that that number is going to continue to grow because we have more and more people that are getting into wholesaling real estate, and they're moving from wholesaling to carrying that paper with seller financing. We also see that there are people that are also tired landlords, and they're starting to sell off some of their inventory because they don't want to be landlords. They'd rather collect payments on a note. So I believe that with the education we're seeing and services like calltheunderwriter.com that could do MLO packages on seller finance, owner occupied in all 50 states for under $500, those kinds of services are going to make that number continue to grow up. Now, that was a lot of information, and so if you would like to download your copy of the slides, along with additional information that wasn't here, like what's the counts for all 50 states, since we just went over the 10, you can go to my website, noteinvestor.com/slides, and you can put in your email, and we will email you those slides along with the additional marketing resources. So I'd like to finish this up with how big is the seller finance note market? So how big is it? And I'm going to answer, it's big enough. Oh yeah, that's an Eddieism right there, right? Yeah. How good of a yield is it? It's good enough. How big is the market? It's big enough. So you just have to figure out what piece of that pie do you want, focus on it, find your niche, and go out and take action on it, because I truly believe that it's a big enough industry for all of us. So thank you for your time today.